Welcome back. Rakesh Sharma, Executive Director at Bajaj Auto, now joins in. Morning, Mr. Sharma. Thanks for joining in. I want to start by talking about how December has been a month. I know there are some brokerages that seem a little disappointed, but I think what's more important is what your internal expectations were. Numbers better than expected for December?
Yeah, of course. I don't know the source of disappointment. I think people set their own targets with, not much basis to them. Half knowledge is a dangerous thing. But I think December, both for the industry and for us, has been very encouraging because it was a good festive. And generally after the festive, there is a steep decline in December. Also, the advent of January makes people sort of hold back on purchase. But despite that, the industry performed well. We were outpacing the industry. Our new businesses, which is the electric business and Triumph, they did very well. In fact, Triumph was almost equal to the festive. In fact, more than the festive period. So all in all, yes, we were very happy with the performance in December.
Right. Talk about Triumph, because I believe the response there has been phenomenal. And like you said, you've done as well, if not better, in terms of sales for that product in December. You're also planning on building capacities here. What's the update on that? What is the outlook? And then, of course, I want to talk to you about Chetak as well, but let's finish Triumph and then move on.
Yeah, Triumph has had a very good impact. We launched in end of July with one model, and then we followed it up with introduction of the Scrambler in October. And both the offerings have been received extremely well. We are building an exclusive network for Triumph. So as of date, we've got about 55 stores over there. Last month, our retails were about 2,800 units or so. But, one has to look at the fact that these were perhaps in about 40 to 45 stores only, and because the rest of the stores came up in the second half of December. And in some places, the acceptance is such, like, Kerala, we are in Cochin and Trivandrum, which is a very important market for this class of motorcycles. And we're already clocking above 15% market share in terms of Vahan registrations in these cities. In Bangalore, another very, very, leading indicator market for this class of motorcycles. There again, if I'm not mistaken, our Vahan market share is already touching, 18% or things like that. So it augurs well for the brand. We want to continue to invest in exclusive network and give the customer an outstanding experience, which requires putting in, a whole lot of training and the right kind of people together. And when you have this kind of an overwhelming response, we're sort of racing to get that capacity, the front-end capacity in place so that we can, build the brand for the long term.
I want to quickly jump into pricing and margin, and I know we're in a silent period ahead of your earnings, but you've on the growth side, of course, you're growing at 2x, so you're clearly the industry leader at large, which is great. But I want to talk about the stable pricing trends. How is that helping your portfolio, or rather keeping prices in your portfolio? Do you see any risk in that sense that could impact near-term pricing, margins, anything that you're concerned about right now, really?
Well, at this point of time, we are not seeing any headwinds when it comes to costs and inflation, any significant headwinds. So it's an equilibrium situation. But of course, we have to watch competition, and if required, we'll need to respond to that. But on its own, it seems to be an equilibrium situation. Even the dollar is holding steady as opposed to the rupee. So we are not really under any kind of pressure to increase prices.
Also, let's talk about exports. Exports in line with what you were expecting internally. Have you met your internal expectations? Outlook on exports, and I believe the disruption in Red Sea is leading to delays and higher freight cost. How are you provisioning for that?
See, exports is in line with the expectations as what we were thinking, because it's a very muted recovery, if I may call it that. It's like, quarter two was better than quarter one, and quarter three is marginally better than quarter two, and quarter four we are expecting to be slightly better than quarter three. The entire export recovery is dependent on the macroeconomic situation working out, the volatility in the currency, both in terms of availability and rates sort of smoothing out, particularly in Africa. We are well positioned, but it all depends on how these economies sort of even out now. They've bottomed out, but now we have to see how they can sort of come back to normalcy. We expect that it will be a step-by-step slow process. We don't expect a rapid return to normalcy. So that is our internal expectation. When it comes to the Red Sea disruption, I think it's a temporary one. These kind of things keep happening. And yes, it did delay shipments to some parts of the world, and it did increase freight costs, but nothing significant to impair the sort of overall performance of exports on this account.
And Sharma, I want to quickly, try and understand from you the three-wheeler export market, because I believe that is experiencing competition and demand headwinds at this stage. The cost analysis also indicate that the margins are entirely dependent on government subsidies and, generally remain significantly lower. What are your thoughts on that? Are you expecting margins to pick up in that business? I mean, the investments there are also fairly large.
I think probably you're talking about some other category, because the margins are not supported by the government in three-wheelers.
The margins looking then in that space?
Sorry, they're looking steady. Like I said, we're not feeling any, there are no major commodity headwinds, and there is no real support from the government on the three-wheeler business. It's a mature business. We have an 80% market share in the three-wheeler business, and it is powering ahead on the basis of the very sort of significant initiative of the government to expand the CNG network, which is taking CNG into the deeper areas of the country. And three-wheelers which are using CNG as a fuel are not only more fuel efficient and therefore beneficial to the customer, but of course, in some aspects of pollutants, they're far better than diesel-powered vehicles. So it's a win-win, both from the societal and the driver and the company point of view.
Very lastly, are you setting yourself up for sort of better months going ahead? And also, in terms of export, I know Nigeria is a key market, but would you be looking to adding any more markets in the global space, sort of to, insulate any sort of pressures that you might feel in Nigeria?
Well, to answer your first question, yes, it started off very promisingly. And like I said, the sort of stars are getting aligned in the sense that the backdrop of the domestic economy is good. Our class of customers seem to be optimistic. Their purchasing power is slightly improved. We have got a very refreshed lineup in a strategically important part of the market, which is the 125cc and above. All those new products have been put into the market. They've got accepted. We've got a very full calendar of new product launches between January and April. So that sort of seems very promising. And we are sort of can't wait to get into the year. And like I mentioned to you before, the two new businesses, Chetak and Triumph, are also looking good now. We've entered a sort of a scale-up phase with them.
Exciting, Mr. Sharma. We are excited for you as well. Good luck. I know big plans for Chetak as well. You've managed to expand your market share for Chetak, especially 5 times in the last couple of months, and the going is looking good. Congratulations, and we'll hopefully see you around when you report your earnings for the quarter.
Sure. Thank you very much.
Well, that's Bajaj Auto. Numbers better than what they were expecting. The stock trades flat. Not much happening on the counter this morning. But of course, sales were up 16%. Exports are looking good. Margins are intact. They are feeling some pressure on back of increase in freight costs, on back of disruption in Red Sea. But largely, all is well. And Chetak is going to be the big bet for Bajaj Auto. We'll take a break. We'll come back. Put the focus on Balrampur Chini. Management is joining us to talk about C heavy molasses price hike and the road ahead for Balrampur.
Back with India Market Open, and let's welcome in Pramod Patwari, Chief Financial Officer of Balrampur Chini Mills, on the show to understand the impact of a slew of things that have happened in the recent past. Mr. Patwari, good having you. Thanks so much for taking the time out. Hope all is well, and at the outset, wishing you a happy new year. Is this C heavy molasses price change indeed a good start to 2024?
A very happy new year to you, all your team members, as well as all the viewers of NDTV Profit.
Thank you.
So as far as the C heavy molasses based ethanol prices are concerned, surely this will help in improving some profitability as far as our company is concerned.
Could you explain what will go behind this? Because it's not just this price hike, but also I heard from other industry players that there is an expectation that there could be price changes made to other forms of molasses or ethanol as well. So could you give us a brief understanding of the same, Mr. Patwari?
Sure. So you must be aware of the fact that every year Government of India announces the ethanol prices for various feedstocks, and these prices are based primarily on the FRP. So as far as the sugar season 23-24 is concerned, the central government has raised the FRP by 10 rupees per quintal. So that should automatically get reflected in the revision of prices of all the feedstock-based ethanol. As far as C-heavy is concerned, we have seen an interim incentive announced by the oil marketing companies. But for the B-heavy, C-base, as well as the juice route, government is yet to take a decision on this. And this, what we understand, this is in very advanced stage.
Okay. To your estimate, would this be something that could come before the end of the quarter, or am I being too pessimistic?
No, it can come any moment now.
Any moment now, right? Okay.
Any moment now, yeah.
Okay. Tally this for me, Mr. Patwari. If either for the industry or for you, there is this uptick in C-heavy prices that has happened from the OMC side. The other end, you're saying any moment some revisions could come in. Let's assume base case revisions happen. And at the same time, there are restrictions on the quantum of sugarcane diverted for ethanol as well happened too. How do the two juxtapose in terms of business prospects for an industry leader like yourself?
A very, very relevant and good question. So for the ethanol year 23-24, government has already put in a cap of maximum 17 lakh tons of sugar diversion to happen into ethanol through B-heavy as well as juice route. Now, if we go by this, then there is no further scope for any incremental diversion to happen in B route as well as juice route. So if we take this into consideration, I believe most of the companies have already rejigged their operating plan for the ongoing ethanol year 23-24. So Balrampur Chini has also rejigged its plan. Earlier, we tendered 10 crores of juice-based ethanol, which has now been revised to 3 crores. We got our allocation for B-heavy, which is around 11.5 crores. And C-heavy, we will be doing around 3.5 crores liter. Rest in the form of ENA as well as the grain-based ethanol. So this is the revised operating plan as far as our company is concerned. And with 17 lakh tons of sugar going maximum into ethanol, and if I can speak on the balance sheet of sugar for the country as a whole, then we started the year with 57 lakh tons of sugar. Expected production as per release given by ISMA is around 317 lakhs after taking into consideration 17 lakh tons of diversion. Consumption would be in the region of around 285, max could be 390. So there is enough inventory which the government has built up. 57 is expected to go up to a level of around 75 lakh tons of sugar. So there is no reason to believe that the increment in B-heavy route as well as juice-based ethanol prices will not happen. It will definitely be linked. It is linked with the FRP increase. So that revision is on the cards now.
No, sure. Sorry, I was not even contesting that. But let's assume, let's leave out sugar for the time being, the opening and the closing stock levels, because I know, I mean, what you are right now, but you might be wrong 6 months down the line, because who knows what happens per se to consumption and production. I'm focused entirely on the ethanol piece right now, Mr. Patwari, and just trying to understand, because it's a slightly complex subject for me to understand. Without these price hikes, when the diversion and the restrictions were put into place, would it have had a financial impact of X percentage on your margins or revenue or profitability, as the case may be? And now that there is a bit of a price hike as well, how much does that impact get offset by? Is there a math around this?
So I can give an attempt to this by taking the examples of Balrampur Chini.
Sure.
So earlier we were contemplating 10 crore, as I said, we were contemplating 10 crores liter of juice-based ethanol, which has now been revised to 3 crores liter. So there is a lower production of 7 crores liter. If you take 65 or 66 per liter as the realization, we will be losing around 450 crores, 450 crores of turnover on the ethanol side. On the other side, our sugar production will go up by 1 lakh ton. 1 lakh ton, if you take 40 rupees as the realization, then also there is a corresponding realization or turnover of around 400 crores in the sugar division. On top of it, as I was mentioning, that we will be producing 3.5 crores liter of C-heavy also. If you take 57 or 56 is the base price for that, then that portion will also give you a revenue of around 200 to 250 crores. So in all the schemes, we are not losing anything. Only the thing is profitability as well as the turnover from distillery will now move to sugar division. However, there will be impact on the cash flow because whatever juice-based ethanol we produce during the season gets lifted in the season period itself, and we are also paid within 21 days of supply. To that extent, our cash flow will be, our working capital utilization will be higher during March and April. because the incremental sugar which we would be producing will get liquidated only over a period of 13 to 14 months, probably say by November or December of next year.
Wow. Well, unfortunately, I'm very short on time right now, unfortunately, Mr. Patwari, but I have to get this clarity from you. So, net, you are saying that on the revenue front, just purely revenue, and I know you don't do business like that, but purely revenue, 450 crores of revenue lost, but nearly 600 to 650 crores of revenue gotten at the other end. So on the revenue front, you're not losing, you might actually gain, but the loss is on the cash flows and presumably on the profitability or the operational metrics as well, slightly lower than otherwise?
Profitability will again depend upon the sugar prices also. So it is very difficult to give any number as at this point in time, but there will be some impact on the financial cost.
Yeah, but the cash flows have a bit of a miss, but the revenue numbers, not all that bad. I presume, Mr. Patwari, you would think that this is temporary in nature, presumably because of the inflation impact and the sugar availability, and this might not be the case the next year, this cap.
Absolutely right. This is only temporary in nature.
Got it. Mr. Patwari, I wish we could have be spoken for slightly longer, but I'm afraid we are out of time, so we'll have to let it go on this note. But really appreciate you giving us this basic math to make our viewers understand what this would mean. Thank you so much for taking the time out and being with us today.
Thank you. Thank you so much.
That's probably one of the best explanations that I've gotten. And this is, of course, Balrampur specific. It might be different for different companies, but the best explanation that I've gotten in the last 4 days about what the net impact of all of the moves that have happened in the sugar space. We need to wrap it up on this leg of India Market Open. But up next, Talking Point takes it forward. Manish Dangi, founder at Macro Mosaic Investing, joins us on the show. Thanks for tuning into Talking Point. I'm your host, Niraj Shah. The case for a chat today are the views expressed by Manish Dangi, founder of Macro Mosaic Investing, on a few things around various asset classes worldwide. So we are going to be talking to him about rotation amongst asset classes in 2024. Arguably not just for 24 but also beyond, but what will happen in 2024. So that's part one. Is there indeed a bear market for the US dollar in the offing? It's something that for a lot of people is unthinkable. Now, Manish talks about the possibilities of the same and the implications of the same, and the implications of falling crude prices and lower yields in 2024. He joins us in our studios today. Manish, so good having you. Thanks for taking the time out, and a Happy New Year to you.
Happy New Year.
Thank you so much. So you are talking about some very interesting aspects which for a few people might be imponderables. But let's start off with what you believe would be the base case, because I presume the base case as well for both bond markets and equity markets has shifted from what they believed to be the base case for 24 back in June.